I invested $10,000 into LYFT, and I plan on doubling down on that in the next week or two. So stick around. I'm going to explain to you guys why I invested $10,000 into LYFT, why I intend to invest another $10,000 into LYFT, and why I believe that they are better than Uber. We're going to go through all the details, and I'm going to show you guys the pretty big profits that I anticipate LYFT is going to yield for its investors. Hey everyone, Corey here. Welcome to the channel. If it's your first time and you enjoy the content, be sure to subscribe and tap the bell. And of course, if you're feeling generous, give me a thumbs up, as it greatly helps the channel grow. LYFT has been the focal point to some degree in my Discord and with my students, and I've been continually posting trade ideas on LYFT with puts and covered calls. And this is because LYFT has turned the page on their future. They are now profitable, and they are now raising their guidance for 2024. LYFT right now is a big time buy. The only scary thing about LYFT is that there is some gaps between 13.50 and 15 that potentially could get filled. However, there's a really big floor in the $15 and $15.50 range, and LYFT hasn't really gone below that for 4 months since they beat the earnings estimate back in February. LYFT is a really good play right now, in my opinion. They're better than Uber. There's a lot of things that makes them better than Uber. So let's dive right in. Let's take a look at the chart. I want to show you guys my investment, the covered calls, how much money I'm able to generate. And so I've been trying to teach my students how they can get in and out of LYFT puts to make consistent cash. One of my students has been selling consistent puts on LYFT, just like I have been. And I didn't get assigned on my 5 puts that I sold this week. Otherwise, I would have more or less 16 or 17,000 in LYFT. I made the juicy premium. That's all that matters. But this is just one of the topics in my Discord that I'm having with my students recently, and that's a lot of LYFT conversation. Rivian, HIMS, Palantir, Hood, SoFi, NEO, American Airlines is another one. LYFT is at a really good support right now at $15, which is why I'm sharing it with my students in my Discord every week, because it's something that's consistent and safe. And speaking of consistency and safety, I told myself when I achieved financial freedom, I would do everything in my power to help other people achieve the same goals, which is why I started this channel. So if you guys are interested in one-on-one coaching with me so I can help you to achieve your goals, as well as joining my Discord and surrounding yourself with like-minded people that are going through the exact same thing you're going through, you guys can join at any time. Although I have very limited spots available, so you guys can do that right there on the screen, investwithcorey.com, or the link is in the information box below. I really want to help you guys achieve your financial freedom and the goals that you're setting out for yourself. And I take a lot of pride and passion in teaching. I love this. I do this all day, every day. It's all I do. It's what drives me, is the success of my students and helping them achieve a better life. I have so much passion for it. And what really, truly drives me is helping others and helping teach others how they can live a better life. I just want to point out that I'm not a financial advisor, and this is not financial advice. I'm just here to teach you guys the technicals, fundamentals, financials, tips and strategies on the market and stocks. However, it's ultimately up to you to decide which stocks you want to put your money into, and ultimately how much of a position size you want to have in those stocks and options, as it's your money. I want to dive right in and show you guys why LYFT is a good company and compare them briefly to Uber, but I'm going to show you guys why LYFT is a better buy right now and why Uber's burning through cash. Now, Uber is not really a good company. I know this firsthand. I know someone who drives for Uber and LYFT, and I'm not even going to begin to get into the horror stories with Uber and what kind of a company they are. LYFT being a lot better of a company, and up until most recently they didn't quite pay as well. During the IPO they did, but there's a lot of different things that are going on between both companies. But overall, just to summarize it, Uber is not a good company, and I feel bad for the investors because I feel like that stock's going to be on a decline. I'm pretty bearish on Uber and I'm pretty bullish on LYFT because of a lot of different reasons. We're going to go over some of them right now. For one, let's look at LYFT. Let's look at their net debt, negative $558 million. Now, what that means is that LYFT is sitting on $500 million in cash. They're not in debt. They're not in debt at all. Like, they have cash. Now, when we go over and look at Uber, they're $5.62 billion in debt. So LYFT is sitting on $500 million in cash. Uber is almost $6 billion in debt. I don't care how good their cash flow is. Cash flow is good, but if you're $6 billion in debt, you're leveraging debt. That's not good. You're constantly bringing in money, but you're in a massive amount of debt. Whereas Lyft is sitting on cash, which means they're in a better position. But that's not the only thing to look at when you're looking at stocks. So let's go ahead and look at, not just net debt and total debt. So their total debt is 1 billion, but their net debt is negative 558. So they're sitting on 558 million in cash, and they have 11.8, almost 12 billion in total debt. So their net debt is almost $6 billion, a little over 5.5. Let's go ahead and look at the cash flow. Free cash flow for Uber is 1.36 billion. Whereas Lyft's free cash flow is 127 million. So they both have positive cash flow. Uber has more, but they also have a ton more debt. So this is not necessarily good for Uber. It's good for Lyft because obviously when you put these two numbers and metrics side by side, you see that Lyft has more growth because they owe no money. They're sitting on cash. If we look at the income statement, 1.28 billion versus 10 billion. So one would think, oh, a lot more income. Not really. It's more income, but they've got so much debt. So let's look at this. Their pre-tax income is negative 630 million. Not only is Uber in debt, they are just burning cash. They're burning through cash right now. If we go over to Lyft and we look at their pre-tax income, only negative 28 million. So they're much closer to zero than $500 million. Uber has almost $750 million in the hole, whereas Lyft is only 28 million. And they're projected to break even this year. So by the end of this year, they're already in better shape. I mean, they already are right now, but they're going to be in much better shape by the end of the year. If we look at EBITDA, 32 million in the positive. So they're 32 million in the positive EBITDA. And we see that the EBITDA for Uber is also in the positive. We can see here Bank of America securities analyst Michael McGovern has updated Lyft to $20 from 15. Morgan Stanley is up 18 from 17, and TD Bank 18 from 16. So the fair value of Lyft right now is between $18 and $20, and it's trading in the $15 range. Lyft is a buy. I believe that Lyft is going to be right around $20 at the new year. So there's about a 25% return on Lyft by the end of the year, maybe a little bit more, plus the covered calls and puts that you may sell on Lyft. When we look at Uber, this video is not about Uber. In my opinion, I'm bearish. They're losing a ton of money. They burnt through $1 billion in investing activities. In their balance sheet, they're $6 billion in debt. Their pre-tax income's almost $750 million in the negative. Their operating expenses are getting better. Operating income, not as good as it was earlier in the year. Net income is negative. Right now, it's tough to justify it. Lyft is the better buy. We look at the chart. We can see that it's holding steady at 1550, a few little dips down to 15, but this is the buy zone we're in right now. I would be selling $15 puts like crazy. And I'm going to tell you guys something else. If Lyft beats the next estimate, which they should, if we look at the previous history, 15 cents, 24, 19, 15. The next earnings report is going to be 16. They're probably going to be closer to 20. If they're up here around 20, this stocks can end up around $18.50 to $19 again. Lyft is turning it around. For anybody that got in down here at $11, that is prime. Anybody that's getting in right now, like I did and like you could do right now at $15, that is going to mean a lot once this stock starts heading up here in the $22 range. That's double your money. I ultimately see Lyft 1-year price target for January 2025 being around $21. They provided an upbeat long-term financial guidance on Thursday, which helped the stock rise. And I quote, "Over the last year, we've transformed our business and established a strong foundation for improving profitability and cash flow," Chief Financial Officer Aaron Brewer said in the news release. "The financial targets we announcing today reflect our expectations of healthy top-line growth and margin expansions as we deliver on our strategic priorities." We can see that Michael McGovern from Bank of America raised the target to $20 from 15. And TD has done the same thing from 16 up to 18. And then also another price target of 20 up from 17 from Gordon Haskett analyst Robert Mullins. So we can see that a lot of people believe in Lyft. And I'm telling you guys right now that Lyft is a very good buy right now. Since their IPO, they've grown exponentially. Just a year ago, they struggled to make $9 to $10 share prices. And now they're bouncing off of 15 consistently. And now the floor for Lyft is around $15. So you can see it's almost a 60% return in 1 year. Lyft is phenomenal right now. We can see here that Lyft is up 3.5%. Uber is down 0.3. Target price from Goldman Sachs, $21, up from 19. RBC Capital, if you guys don't know who they are, it's Royal Bank Centura. They merged Centura Bank in the US, merged with Royal Bank Canada. That's RBC. They have a price target of $24. I'm in line with that as long as it's by the end of the year or early next year, not right away. However, if Lyft beats the earnings estimate by a good amount in July, we could see Lyft jump around $20 to $24. It's possible. It's also outperformed by BMO Capital, up to $19 from $18. This just keeps going on and on. Piper Sandler raised to 24 from 23. So we can see that this list just keeps going on and on and on. This is what I expect out of Lyft. Obviously not in a straight line, but that's the target. We're going to be somewhere in November, December. I would say by the new year, we're going to be over here somewhere $20 to $25. Lyft is a really good buy, and it probably will be a little bit more aggressive. But let's jump into the trades, show you guys how you can get into Lyft, show you my $10,000 position in Lyft, show you the money that I've made, and, you know, go over a few more details on how to get in and make some money. So here we go, guys. This is my position in Lyft. $16.10 is my average price, but that's only because I purchased my first 100 shares when it was like almost $19. That's bad. But then I bought 500 more shares in the $16 and $15 range. I'd like to get a few more $1,000s into Lyft. Like, I'd like to buy at least another 400 shares, which is about $6,000, $7,000. And the reason I want to do that is I want to get my average price down to $15.70 or $15.50. But we'll see how things play out. Every time Lyft dips below $15.40 or $15.30, I'm going to add 100 shares. But right now, I have just under 10 grand in Lyft. When the price gets up around $16.50, it's $10,000 in value. So a little under 10 grand right now, but this is one of my bigger plays in my small brokerage. I have another $10,000 in Lyft in my big brokerage. I do not have any Uber, and I will not touch Uber with the 10-foot pole. I just won't do that. I don't care for Uber, but I do believe in Lyft. So I have it in my challenge account here, and I also have it in my big portfolio. So let me show you why I like Lyft so much. Look at these calls. I have 5 covered calls at $21, which is pretty good. It's $105 for the week. If Lyft stays below $16.50, all $110 is mine. Okay. Actually, my average credit is 22. So $110 there. I also have one covered call that I wanted to get a little aggressive on, because if I get assigned at 16, then I'll just wait for it to drop a little bit and buy more shares. But I wanted to get a little extra premium. Instead of $22, I collected $36. So I collected $146 for 1 week. So 10 grand's making me like $600 a month consistently, and sometimes more, because if I had sold all $16 calls like I did last week, well, that's a lot. That's a little over $200, depending on where the price is. That's $800 a month. $800 a month on 10 grand is just under 10%. So I'm averaging 5 to 8% return on my investment. In a year, that's pretty much between 60 and 100% a year. And that's a lot. That's really good, and it's really safe. And if we go back to Lyft in my history, you can see it's a hold with some buy, almost no one selling. Very little selling. It's 30% buy, 60% hold. Lyft, very good. Fair value 25. This stock is undervalued like crazy. All right, right here you guys can see $20, $22, 11, 7, 120, 50, 80, 20, 35. If we add up everything that I've collected on Lyft, I've made over $607 on covered calls in just over 6 weeks. So even though I'm in the hole 300 on Lyft right now, I'm really in the positive $300. And that is what I love about these covered calls. In another month, I'm going to be almost $1,000 in the positive, even if Lyft stays at $15.50. And I'm just going to keep selling covered calls. Like I said, Lyft, very good strategy right now. Very good stock. Let me show you guys how you can get in. I would sell puts to get in right now, but I wouldn't get too safe with the puts because of the fact that you might miss an entry. And if Lyft jumps back up to 16 next week and doesn't fall back down, then you might be looking at not getting assigned, which is fine for individuals that don't want the stock. But if you want the stock and the premium, got to be a little bit more realistic. So I would sell a put at 15 or 15.50. Right now, I believe 15.50 is the better one because you can collect $45 juicy premium and your break even's $15. That's perfect because I don't see LYFT. You could sell a 15 for $25, but this is likely to get you premium without being assigned, as I don't see LYFT going below 15. The safest bet is 14.50 at $11, but I really wouldn't do that. I love LYFT. I might sell $15 puts right now. I might sell another 5 contracts. That'll get me another $125 a week. And if I get assigned, I just get to add more to my portfolio at $15, which is going to bring my average cost down. When you're selling covered calls on LYFT, I recommend if you're going to go weekly, 16 is okay because it seems like it's having trouble breaking 16. If you plan on exiting the stock and just want a quick profit and you want juicy premium of $35, $36 per week, that's fine. But to be a little bit safer on LYFT to hold your shares, I would stick around 16.50 or 17. 17 is really safe. It'll get you about $10 to $11 the way the price is sitting right now. But if you wait for LYFT to go up to about 15.80, 15.90, then you could sell them for about $15 because you can see once it gets to about $1 away, you'll get 20 bucks. So if you wait for LYFT to get closer to 16, you can sell a 17 for about $20. But on average, it's between $11 and $16 to go out $1.40, which is safe because the delta is 17. So right around 20 delta will get you about $12 to $13, which is what I try to aim for consistently. So for me, it's $75 to $100 a week, consistent income, fairly safe. But if I really want to go aggressive on, let's say, a 1650 call for a 26 delta, I can make $20 to $25 a week. However, I did sell one at a 40 delta, which is insane, but it got me $36. But it's okay to do this once in a while when you know where the ceiling is or the supply zone or the resistance zone, which there is a lot of resistance at 16 and 1650 and a little bit more 17. So you can see that even at $17 or even 1650, if you have 5 contracts, then you're generating $100 a week, $400 a month, consistent, safe income. Let's go over to the whiteboard right quick. I have 600 shares and I'm in the negative $313, but I've sold covered calls that have made me $607. So we're going to do 607, take away 313. I've made $294 in profits. And after this week is over and I sell them again next week, I'll be roughly around 394. And then we do that a couple more times. In 1 month from now, I'm going to be around $594 profit. If LYFT was to drop, let's say from 1558 where it's at now, and it was to go down to the gap fill around 1340, even if this was to happen, this would be about a $2.18 drop. So $218 times 6, this would be $1,308. So $1,308 basically minus 600 is 708. So I'd be out $708, but I would still be making money on covered calls. I'd be selling 14.50 or 15 covered calls. And I would do that a week out and roll if I had to as the price comes back up. And I'd be able to safely generate about $250 a month doing that because I'd play it safer. And instead of going $1 out, I'd go $1.50 and I'd be selling 15 or 15.50 calls. And by doing that in 2 months, that's $500. So in 2 months, I would recoup almost all of this. 2 to 3 months, that would be completely out. So if the price goes back up to my break-even price of $16.10, then all of this is profit. So by selling covered calls, even if the price dropped to $13, my covered calls are making up for all of that. This is why selling puts to get in and selling covered calls consistently is the best strategy. But ultimately, selling covered calls is the way to go. You can see I'm out 313, but I made 607, so I'm still up 294, and I just keep selling covered calls to make up for any dips. And then I dollar cost average to get my average cost down. So if it dipped to 1345, I would add another 500 shares. My average cost would be around $14 at that point. So when the stock goes to 16, that would be a lot. That'd be like $3,000 profit in the shares almost, plus all the covered calls. So I'd be well into $4,000, $5,000 profit at that point. Right here is a quick and short to the point demonstration of what I teach my students in the Discord and my one-on-one coaching. I wanted to share this with you guys and show you my portfolio on LYFT and why I think it's an absolute buy and they're undervalued right now. If you guys want to join my Discord, surround surround yourself with like-minded people and you're interested in one-on-one coaching with me and you want to learn so much more and achieve financial freedom, I would love to have you, although limited spaces remain, but I would love to teach you and help you grow your portfolio and your wealth and help you to achieve financial freedom for your family. So this way you don't have to be stressed out financially, and you can do that in investwithcorey.com right there on the screen, and the link is in the information box below. I would love to have you guys. I appreciate you being here. Thank you so much. Be sure to subscribe and tap the bell if you guys enjoy the content, and you can give me a thumbs up if you're feeling generous, as it helps the channel grow. But don't be upset that this video's over. I got another one just for you, and it's how to get paid to buy your favorite stocks, and that video is right here. Hope you guys enjoy it. We'll see you over there. Click it. Remember, let's grow our wealth together. Take care, guys.